Welcome, XRP enthusiasts. Today, November 28th, 2025, XRP stands at $2.18, reflecting steady institutional interest amid broader market dynamics. Recent ETF data shows a net inflow of $22.68 million yesterday, pushing assets under management to $688 million. This builds on a strong debut month with over $643 million in total inflows. But before we dive in, remember, this is not financial advice. Always conduct your own research and consult professionals. Let's start with the essentials. XRP, developed by Ripple in 2012, is a digital asset designed for efficient cross-border payments. Unlike traditional systems like SWIFT, which can take days and incur high fees, the XRP ledger processes transactions in 3 to 5 seconds for fractions of a cent. It uses a consensus protocol for validation, making it energy efficient and scalable, handling up to 1,500 transactions per second. Over 300 financial institutions integrate with RippleNet, using XRP as a bridge currency for on-demand liquidity. Now, turning to today's discussions on X. Influencer Tony Edward highlighted surging institutional demand, noting, "Huge! Institutional demand for XRP is surging. This is fact, not feelings." With nearly 900 likes, it underscores how data, not sentiment, drives adoption. Similarly, analyst Armando Pantoja pointed to Elliott wave patterns post-Gensler's exit, targeting levels from $8 to $30 based on historical breakouts. These insights align with on-chain metrics. ETF purchases at $45 million daily could absorb 613 million XRP monthly, tightening supply from OTC desks estimated at 3 to 5 billion tokens. What does this mean technically? XRP recently closed above a key descending trend line on the 4-hour chart, forming a bullish engulfing candle. RSI nears a bullish crossover, and a double bottom holds at support levels. Analysts like Crypto Insightok observe, "We still have all the ST retracement levels to work through, but so far a double bottom is holding." Short term, watch the 0.618 Fibonacci at around $1.91 for potential backtests, but breaking $2.50 could signal new highs. Rhetorical question, why has XRP shown resilience? It decoupled from Bitcoin in recent weeks, as noted by Zach Rector's charts. While BTC faced dips, XRP held $2, with the XRP-BTC pair climbing. Community threads from Cassandra Quayle recap 4 major ETFs: Canary, Bitwise, Franklin Templeton, Grayscale, driving volume despite market corrections. Addressing common misconceptions. First, centralization concerns. The XRP ledger is decentralized. Anyone can run a validator node, and Ripple's escrow holdings are transparent and time-released. Second, the SEC case, resolved in 2023, XRP isn't a security for retail sales, providing regulatory clarity that spurred these ETF launches. Third, limited to banks? Far from it. Integrations like Flare Networks enable DeFi staking with teases of yields via STXRP by December 3rd. If you're navigating volatility, like last week's 5% dip tied to BTC's pullback, focus on fundamentals. Q, 3/20/25. ODL volume reached $15 billion, up 40% year over year per Ripple reports. On-chain whale accumulation remains net positive per Crypto Sensei. Looking ahead, what if ETF momentum mirrors ETH's post-launch stability? Projections from Ripple Bullwinkle suggest supply shocks from daily buys, potentially forming vertical price moves. Chartered technicians eye a 5th Elliott wave pushing toward $20, a 3,536% gain from lows, based on pattern completion. In summary, XRP's utility in payments, combined with ETF-driven demand and technical breakouts, positions it as a key player in digital finance. From its 2012 origins to today's 2.18 mark, it's evolved through challenges into a robust asset. If this overview sparked thoughts, like the video, comment your take on XRP's next milestone, subscribe for more breakdowns, and share with fellow researchers. Stay informed. Knowledge is power.